While you're trying to pay off your debts, they're not waiting for you to finish. They're becoming bigger by day, since no one loans money for free. You've probably heard that debt is the root of all evil, and that debt is the equivalent of slavery. This is accurate in certain ways. Your life is finished if you're drowning in debt. This video will talk about how rich people use debt to make even more money. We'll go through 5 ways to make use of debt like the wealthy. So thumbs up for this video, and let's get started. Consumer debt in the United States totals about $15 trillion, with the average family owing more than $5,300. The GDP of the United States is just over $21 trillion, meaning that the whole economy is built on debt. Debt isn't necessarily a negative thing though, because the bulk of our debt is bad debt. This is a divisive perspective. You almost certainly have credit card debt, a car loan, and maybe student debt, all of which will take decades to pay off. How could that possibly be advantageous? Let's take a look at how wealthy people continue to use debt to make even more money to determine if this is a good thing. It may seem weird because why would someone with a large sum of money take out a loan in the first place? People who don't have enough money are urged to use debt. That is not, however, how capitalism works. Debt may be a powerful instrument if you know how to utilize it properly. Number 1. The majority of commerce is dependent on debt. Borrowing money to start a business is a terrible idea, which may sound contentious. However, for certain firms, debt is the greatest alternative. For example, you want to sell earphones. It's rather a common commodity with a steady demand for it. In a perfect world, you'd travel to China and locate an earphone manufacturer that makes high-quality items at a cheap cost. You'd buy a shipment of earphones, transport them to your region, and distribute them to your clients. Unless it's a more sophisticated product that necessitates going to the facility. However, much of this is done online through sites like Alibaba. However, there's a catch. You do not have to pay for things to receive them initially. This is why, in the previous 50 years, China has evolved into the world's factory producing practically everything. To make it easier to sell, most of these firms will gladly loan you their products in return for a payment at a later date. For the past 50 years, the business has been conducting in this manner. After the product was sold in any place in the world, the buyer would pay the maker and borrow additional things. The manufacturer makes it, and you assist them in selling it. You'll make money if you can sell it for more than their asking price. Selling is one of the most important skills you can learn because you're not risking your own money in this transaction. Number 2. Refinancing. Real estate debt is the best kind of debt since it's loaded with loopholes. If you don't have a mortgage, you're paying extra taxes. Wealthy people have multiple mortgages to get all of those deductions. Keep in mind that every dollar you save instead of paying taxes is a dollar you make. This is how millionaires in real estate make their money. Assume you have $200,000 in savings. You won't be able to buy a property and won't be able to get a mortgage for more than $800,000 since you'll have to put down 20%. Let's say you find a property for $500,000 that are in terrible condition and need some work. You go to a bank and apply for a 20% down payment mortgage. Then for around 10% of the total cost, or $50,000, you intend to renovate the house. You go back to the bank to refinance your mortgage this time. The property was only worth $500,000 when you got your first mortgage since it was in such bad shape that no one wanted to live there. However, now that you've renovated it, others are interested in renting it. As a result, let's say the home's market value jumps to $700,000. Let's pretend you're getting another 80% mortgage, but this time for $560,000 instead of $700,000. The first $400,000 will go to your first bank, which gave you the first mortgage. Even after deducting $50,000 spent on renovations, you still have a profit of $110,000. You made a profit of $110,000 using debt, and you're left with a property that you can rent out to grow equity and earn passive income. You can also avoid paying taxes because you have a mortgage. Do you still consider that debt to be terrible now? Number 3. Hedge funds. Hedge funds are created by the wealthy, for the wealthy, and they typically employ controversial techniques. Ordinary people do their hardest to forecast which firms will expand and increase in value, and we invest our hard-earned money in the hopes that they will. Hedge funds, on the other hand, frequently employ the opposite tactic. When businesses fail or go bankrupt, they strive to profit. How do hedge funds profit from debt? For example, you would expect a stock like Facebook to fall because you know that Apple, the world's most popular smartphone manufacturer, will no longer allow its applications to track your online activities, such as Facebook or Instagram, and will instead prioritize privacy. As a result, Facebook's business model will suffer significant damage. As a result, you contact your broker to borrow a single $100 Facebook stock and sell it on the open market for $100. You now have $100 in your pocket, but your broker still owes you one Facebook stock. Next week, the stock price of Facebook will drop to $70. You've made $30 by investing $100 in one Facebook stock for $70. It may look easy, but it is rather complicated and deadly. Consider what happened if you made a mistake or the price doubled in the blink of an eye. You must still pay interest on the shares you borrowed and return that single Facebook stock to your broker. You must acquire the stock for $200 to return it to your broker. When you acquire stock and try to sell it when its value rises, the most you can lose is your initial investment. Shorting, on the other hand, will increase your losses if the price continues to climb. Number 4. Forex. The Forex market is where currency trading takes place. It makes international trading easier. You may spend US dollars in China, but you must exchange them for Chinese yen. For example, in China, there is a market where anybody or any organization may buy foreign money, and these currencies fluctuate based on several reasons. When the Federal Reserve raises interest rates, it reduces the number of dollars available in the market, making the US dollar stronger against foreign currencies or vice versa. If you can predict which currencies will rise or fall, you may make a lot of money in this market. But what sets these markets distinct from the rest is that for every dollar you trade in Forex, you may borrow an additional $100. If you trade with your $1,000, you may have a position of $100,000. It will be important even if you generate a 1% profit. Number 5. Credit score. As you can see, debt is a strong instrument. Every successful firm or entrepreneur uses debt in a variety of ways, especially if they have a well-established business plan. Almost every business borrows money to support purchase orders. So stop thinking of debt as a terrible thing. Make a name for yourself as a trustworthy borrower. Hundreds of billions to trillions of dollars are sitting in the bank ready to be borrowed, and institutions may suddenly manufacture money if there isn't any. This video should have taught you something. Also, if you like this video, please remember to like, subscribe, and share it. This is your 3 Towers Investing channel, bringing you the most up-to-date information on finance, investment, and innovation. Thank you for watching, and I look forward to seeing you in the future video.